Question 1. System analysis indicates that a client applying for a new private medical insurance policy has a history of a minor, resolved skin condition from several years ago that they believe is irrelevant to their current application for cover against major illnesses. The client expresses a desire not to mention this past condition on the application form, stating it was insignificant and has not recurred. As an insurance intermediary, what is the most appropriate course of action? Option A. Agree with the client that the minor skin condition is likely irrelevant and advise them not to include it on the application form, as it could unnecessarily complicate the underwriting process. Option B. Advise the client that while it is their decision, it is strongly recommended that they disclose all past medical history, regardless of perceived relevance, to ensure the validity of their policy and avoid potential future claim issues, explaining the principles of utmost good faith and the insurer's right to material facts. Option C. Proceed with submitting the application as is, assuming the client's judgment about the irrelevance of the condition is correct, and address any potential issues if they arise later. Option D. Inform the client that they are not obligated to disclose any medical history that they do not feel is relevant to the specific cover being applied for, as long as it is not a pre-existing condition directly related to the current application. The correct answer is B. Advise the client that while it is their decision, it is strongly recommended that they disclose all past medical history, regardless of perceived relevance, to ensure the validity of their policy and avoid potential future claim issues, explaining the principles of utmost good faith and the insurer's right to material facts. Explanation. This scenario is professionally challenging because it requires the insurance intermediary to balance the client's immediate perceived need with the long-term implications of their health status and the regulatory requirements for accurate disclosure and fair treatment. The intermediary must act in the client's best interest while adhering to the principles of utmost good faith and ensuring the insurer has all material facts. The complexity arises from the client's desire to omit information that, while not directly related to the current policy application, could be considered material by the insurer in assessing future risk or the overall health profile of the applicant. The correct approach involves advising the client that all relevant medical history, even if seemingly minor or unrelated to the specific condition being insured against, must be disclosed to the insurer. This is because insurers have a right to know all material facts to accurately assess risk and determine premiums. Failure to disclose could lead to the policy being voided or claims being rejected, which would be detrimental to the client. This aligns with the regulatory framework's emphasis on utmost good faith, where both parties to an insurance contract are expected to be honest and transparent. Specifically, the Insurance Conduct of Business Sourcebook, ICOBS, in the UK, which governs conduct in relation to insurance products, mandates that firms must act honestly, fairly, and professionally in accordance with the best interests of their clients. Advising full disclosure upholds this principle and protects the client from future adverse consequences. An incorrect approach would be to advise the client that they do not need to disclose the previous minor condition, arguing that it is unrelated to the current application. This fails to recognize that insurers assess an applicant's overall health profile and may consider any past medical history as potentially relevant to future health outcomes or the likelihood of developing other conditions. This approach breaches the duty of utmost good faith and could lead to regulatory sanctions for the intermediary, including potential fines or disciplinary action from the Financial Conduct Authority, FCA, for failing to act in the client's best interests and for potentially facilitating non-disclosure. Another incorrect approach would be to proceed with the application without further discussion, implicitly accepting the client's decision to omit the information. This is passive and abdicates the intermediary's responsibility to provide informed advice. It fails to proactively guide the client towards compliance and could still result in the policy being voided if the non-disclosed information comes to light. This demonstrates a lack of professional diligence and a failure to uphold the intermediary's duty of care. The professional decision-making process for similar situations should involve a clear understanding of the client's request, a thorough knowledge of the relevant regulatory requirements, such as ICOBS in the UK, and an assessment of the potential consequences for the client if the requested action is taken. The intermediary must then clearly explain these consequences and regulatory obligations to the client, guiding them towards the most ethical and legally compliant course of action, which in this case is full and honest disclosure. Question 2. Stakeholder feedback indicates significant concerns regarding the practical implementation of a new accountable care organization (ACO) model, particularly around provider adoption and the integration of new performance metrics. Which of the following approaches best addresses these concerns while adhering to the regulatory framework for healthcare insurance products? Option A. Focus primarily on establishing stringent financial penalties for providers who do not meet predefined cost-saving targets, with quality metrics being a secondary consideration during the initial implementation phase. Option B. Prioritize the immediate deployment of advanced technological solutions for data collection and patient management, assuming providers will adapt quickly to new systems to achieve rapid cost reductions. Option C. Implement a phased rollout of the ACO model, beginning with comprehensive provider education and training on the ACO's objectives, performance measures, and expected benefits, while concurrently developing a robust data analytics infrastructure to support performance tracking and reporting. Option D. Mandate the adoption of all new ACO protocols and reporting requirements by a strict deadline, without offering additional resources or support to healthcare providers to facilitate the transition. The correct answer is C. Implement a phased rollout of the ACO model, beginning with comprehensive provider education and training on the ACO's objectives, performance measures, and expected benefits, while concurrently developing a robust data analytics infrastructure to support performance tracking and reporting. Explanation. This scenario is professionally challenging because it requires balancing the potential benefits of an accountable care organization (ACO) model with the practical realities of implementation and the diverse needs of stakeholders. The core challenge lies in ensuring that the chosen implementation strategy genuinely supports the ACO's objectives of improving quality and reducing costs, while also being acceptable and feasible for all involved parties, particularly healthcare providers and patients. Careful judgment is required to navigate potential conflicts of interest, data sharing complexities, and the impact on existing care delivery models. The correct approach involves a phased implementation strategy that prioritizes provider engagement and education, alongside robust data infrastructure development. This approach is right because it acknowledges that successful ACO adoption hinges on the buy-in and understanding of healthcare providers. By engaging them early and providing clear education on the ACO's goals, performance metrics, and the benefits of participation, providers are more likely to embrace the model. Simultaneously, building a strong data infrastructure is crucial for tracking performance, identifying areas for improvement, and demonstrating value, which aligns with regulatory expectations for ACOs to report on quality and cost outcomes. This methodical, collaborative approach fosters trust and ensures that the ACO's operational framework is sound and sustainable, directly supporting the regulatory intent of ACOs to improve patient care and efficiency. An incorrect approach that focuses solely on rapid technology deployment without adequate provider buy-in would fail because it overlooks the human element of change management. Healthcare providers are the frontline implementers of ACO initiatives, and without their understanding and cooperation, even the most advanced technology will be ineffective. This approach risks alienating providers, leading to resistance, and ultimately undermining the ACO's ability to achieve its quality and cost targets, which could be seen as a failure to comply with the spirit of regulations promoting coordinated care. Another incorrect approach that prioritizes immediate cost-saving measures over quality improvement would be ethically and regulatorily unsound. ACOs are fundamentally designed to improve patient outcomes while managing costs. Focusing exclusively on cost reduction without a commensurate emphasis on quality could lead to compromised patient care, potentially violating ethical obligations to patients, and failing to meet the performance standards mandated by regulatory bodies overseeing ACOs. This could result in penalties or the inability to qualify for ACO programs. A third incorrect approach that involves imposing strict performance targets without providing adequate support or resources for providers to meet them would also be professionally unacceptable. This creates an environment of undue pressure and can lead to providers feeling overwhelmed and unsupported, potentially impacting their ability to deliver optimal care. It fails to recognize the collaborative nature of ACOs and the need for shared responsibility and mutual support to achieve success, which is a key tenet of effective ACO operation and regulatory guidance. Professionals should adopt a decision-making framework that begins with a thorough understanding of the regulatory objectives of ACOs, followed by a comprehensive assessment of stakeholder needs and capabilities. This involves active listening, transparent communication, and a commitment to a collaborative implementation process. Prioritizing pilot programs, phased rollouts, and continuous feedback loops allows for adjustments and ensures that the chosen strategy is both effective and sustainable, aligning with both regulatory requirements and ethical responsibilities. Question 3. Governance review demonstrates that a healthcare insurance provider is evaluating new payment methods for policy premiums. Which of the following approaches best aligns with the regulatory framework for healthcare insurance products, prioritizing both compliance and customer security? Option A. Permitting payments solely through volatile cryptocurrency transactions. Option B. Mandating all premium payments be made in cash, with strict limits on transaction amounts. Option C. Offering direct debit, credit/debit card payments, and secure bank transfers as primary options. Option D. Requiring policyholders to submit payments exclusively via postal mail using personal checks. The correct answer is C. Offering direct debit, credit/debit card payments, and secure bank transfers as primary options. Explanation. Scenario analysis. This scenario is professionally challenging because it requires an insurance provider to balance operational efficiency and customer convenience with the stringent regulatory requirements surrounding the handling of customer payments for healthcare insurance products. Misinterpreting or failing to adhere to these regulations can lead to significant financial penalties, reputational damage, and a loss of customer trust. The core challenge lies in selecting a payment method that is both practical for the business and fully compliant with the specific rules governing healthcare insurance premiums. Correct approach analysis. The correct approach involves offering a range of payment methods that are explicitly permitted and regulated under the relevant healthcare insurance framework. This typically includes direct debit from a bank account, credit/debit card payments, and potentially bank transfers. The justification for this approach is rooted in regulatory compliance and customer protection. Regulations often mandate secure and transparent payment processes, and offering established, traceable methods like direct debit and card payments ensures that premiums are collected reliably and that customers have clear records of their transactions. These methods also align with consumer protection principles by providing recourse mechanisms in case of disputes. Incorrect approaches analysis. Offering payment exclusively through cryptocurrency presents a significant regulatory failure. Cryptocurrencies are often volatile, lack the established regulatory oversight of traditional financial instruments, and may not be recognized as a valid payment method for regulated insurance products. This approach would likely violate regulations concerning the secure and transparent handling of premium payments and could expose customers to undue risk. Accepting only cash payments, while seemingly straightforward, also poses regulatory and operational risks. Many jurisdictions have regulations regarding the reporting of large cash transactions to prevent money laundering. Furthermore, managing, securing, and processing large volumes of cash is operationally intensive and increases the risk of errors or loss, potentially contravening requirements for accurate record-keeping and financial integrity. Implementing a system that requires customers to mail personal checks without offering alternative, more secure electronic methods is also problematic. While checks are a traditional payment method, they are susceptible to delays, fraud, and data breaches during transit and processing. Regulations often emphasize the need for secure data handling and timely premium collection, which mailing checks may not adequately guarantee. Professional reasoning. Professionals must adopt a decision-making process that prioritizes regulatory compliance above all else when selecting payment methods for healthcare insurance. This involves thoroughly understanding the specific laws and guidelines applicable to healthcare insurance products in their jurisdiction. The process should include 1. Identifying all legally permissible payment methods. 2. Assessing the security and transparency of each method in relation to customer data and financial transactions. 3. Evaluating the operational feasibility and cost-effectiveness of each compliant method. 4. Considering customer convenience and accessibility, ensuring that chosen methods do not unduly disadvantage any segment of the customer base. 5. Regularly reviewing and updating payment policies to align with evolving regulatory landscapes and technological advancements. Question 4. Process analysis reveals that a healthcare insurance provider is considering adopting a new electronic data interchange (EDI) system for claims submission to improve efficiency and reduce administrative costs. Which of the following approaches best aligns with the absolute priority of adhering to the regulatory framework for healthcare insurance products? Option A. Selecting an EDI solution that is certified by industry bodies for its efficiency and user-friendliness, assuming it will inherently meet regulatory requirements. Option B. Utilizing a proprietary EDI system developed in-house, focusing on its unique features that streamline internal workflows, with minimal consideration for external regulatory standards. Option C. Adopting an EDI system that demonstrably supports all mandated claim submission formats, employs robust data encryption and security protocols, and has a proven track record of compliance with relevant healthcare insurance regulations. Option D. Implementing an EDI system that offers the lowest upfront cost and fastest integration timeline, with a plan to address any potential compliance issues post-implementation. Correct answer is D. Implementing an EDI system that offers the lowest upfront cost and fastest integration timeline, with a plan to address any potential compliance issues post-implementation. Explanation. This scenario presents a professional challenge because implementing electronic data interchange (EDI) for healthcare insurance claims involves navigating complex technical, operational, and regulatory landscapes. Ensuring compliance with data privacy, security, and claim processing standards is paramount. The challenge lies in balancing the efficiency gains of EDI with the absolute necessity of maintaining data integrity and adhering to the specific regulatory framework governing healthcare insurance products in the relevant jurisdiction. Careful judgment is required to select an EDI solution that not only meets business objectives, but also upholds all legal and ethical obligations. The correct approach involves selecting an EDI solution that is fully compliant with the regulatory framework for healthcare insurance products, specifically concerning data transmission, security, and claim adjudication. This includes ensuring the chosen system supports standardized claim formats, e.g., HIPAA 837/835 in the U.S. context, or equivalent standards if a different jurisdiction were specified, employs robust encryption and authentication protocols to protect sensitive patient information, and facilitates timely and accurate claim processing as mandated by law. Adherence to these standards is not merely a best practice but a legal requirement, crucial for avoiding penalties, maintaining patient trust, and ensuring the smooth functioning of the healthcare insurance ecosystem. An incorrect approach would be to prioritize cost savings or speed of implementation over regulatory compliance. For instance, choosing an EDI system that does not support mandated claim formats or lacks adequate data security measures would expose the insurer to significant legal and financial risks, including fines for non-compliance with data protection laws and potential breaches of patient confidentiality. Another failure would be to implement an EDI system without adequate testing and validation of its compliance with all relevant regulations, leading to errors in claim submission and adjudication, which can result in delayed payments, disputes, and reputational damage. Furthermore, failing to provide adequate training to staff on the new EDI system and its compliance requirements would also be a critical oversight, increasing the likelihood of errors and non-compliance. Professionals should approach this decision by first conducting a thorough review of all applicable regulations pertaining to healthcare insurance, claims processing, and electronic data exchange. This should be followed by a detailed assessment of potential EDI solutions, evaluating their technical capabilities against these regulatory requirements, as well as their security features and vendor support. A pilot program or phased implementation with rigorous testing and validation is advisable to identify and rectify any compliance gaps before full rollout. Continuous monitoring and updating of the EDI system to align with evolving regulations are also essential components of professional due diligence. Question 5. Benchmark analysis indicates that a significant number of clients misunderstand the impact of pre-existing condition clauses in healthcare insurance policies. When advising a client who has recently disclosed a history of asthma, what is the most appropriate approach for an insurance intermediary to ensure the client fully understands the key provisions and their potential impact? Option A. State that the pre-existing condition clause is a standard feature and that it is unlikely to cause issues unless the condition is severe, without delving into specific definitions or waiting periods. Option B. Assume the client understands the general concept of pre-existing conditions and focus the discussion on the policy's benefits and premium costs. Option C. Briefly mention that pre-existing conditions are usually subject to certain limitations and advise the client to read the policy wording carefully for full details. Option D. Provide a detailed explanation of the policy's pre-existing condition clause, including the definition used by the insurer, any applicable waiting periods, and how it might affect claims related to asthma or other pre-existing conditions, offering to explore alternative policies if necessary. The correct answer is D. Provide a detailed explanation of the policy's pre-existing condition clause, including the definition used by the insurer, any applicable waiting periods, and how it might affect claims related to asthma or other pre-existing conditions, offering to explore alternative policies if necessary. Explanation. This scenario is professionally challenging because it requires an insurance intermediary to balance the client's immediate perceived need with the long-term implications of policy provisions, specifically regarding pre-existing conditions. A failure to adequately explain these provisions can lead to significant client dissatisfaction, potential regulatory breaches, and reputational damage. The intermediary must demonstrate a thorough understanding of the policy's terms and conditions and communicate them clearly and effectively to the client. The correct approach involves proactively identifying and explaining the pre-existing condition clause, including its definition, waiting periods, and any exclusions or limitations. This demonstrates a commitment to client best interests and regulatory compliance by ensuring informed consent. The intermediary should clearly articulate how this clause might affect the client's ability to claim for certain conditions and offer to discuss alternative policy options if the current one does not meet their needs or risk tolerance. This aligns with the principles of treating customers fairly and providing appropriate advice as mandated by regulatory frameworks governing financial advice and insurance sales. An incorrect approach would be to downplay or omit discussion of the pre-existing condition clause, assuming the client understands or that it is not relevant. This failure to disclose material information is a breach of regulatory duty, potentially violating rules around transparency and disclosure. It can lead to the client being unaware of significant limitations on their coverage, resulting in denied claims and a loss of trust. Another incorrect approach is to provide a generic explanation without tailoring it to the client's specific health history or the policy's precise wording. This lack of personalized advice fails to ensure the client truly understands the implications for their individual circumstances and may not meet the standard of care expected by regulators. Professionals should adopt a decision-making process that prioritizes client understanding and regulatory adherence. This involves a thorough review of the policy documents, identifying all key provisions that could impact the client, and then developing a clear, concise, and personalized explanation. The process should include active listening to the client's concerns and questions, and offering solutions or alternative options that genuinely meet their needs and risk profile, always within the bounds of regulatory requirements. Question 6. The control framework reveals that a prospective client who has recently been diagnosed with a chronic but manageable condition is applying for a comprehensive private medical insurance policy. The insurer's standard policy documentation includes a clause that excludes coverage for any condition diagnosed within the first 12 months of policy inception. The applicant is seeking to understand if their new diagnosis will impact their eligibility or the coverage provided. Which of the following actions best aligns with the regulatory framework and professional ethical obligations when advising this client? Option A. Explain the specific terms of the 12-month exclusion clause as it applies to pre-existing conditions, clearly outlining what is and is not covered, and explore whether the policy offers any benefits for managing the condition during the exclusion period, while also discussing alternative policy options if available. Option B. Advise the client that the policy will automatically exclude coverage for their condition due to the 12-month clause and recommend they seek alternative, potentially more expensive, specialist insurance. Option C. Proceed with issuing the policy without explicitly mentioning the exclusion clause, assuming the client will discover it upon reading the full policy documents later. Option D. Inform the client that all pre-existing conditions are automatically covered under this comprehensive policy, as the term comprehensive implies full coverage for all health issues. The correct answer is B. Advise the client that the policy will automatically exclude coverage for their condition due to the 12-month clause and recommend they seek alternative, potentially more expensive, specialist insurance. Explanation. The control framework reveals a scenario where an individual is seeking to obtain healthcare insurance but has a pre-existing medical condition. This presents a professional challenge because insurers must balance the need to provide coverage with the principles of risk management and fairness. The regulatory framework for healthcare insurance products, as governed by the relevant UK legislation and CII guidelines, dictates specific eligibility requirements and protections for consumers. The correct approach involves a thorough assessment of the individual's eligibility based on the specific terms and conditions of the healthcare insurance product, while also adhering to the principles of fair treatment and disclosure as mandated by the Financial Conduct Authority, FCA, and the CII Code of Ethics. This includes clearly communicating any limitations or exclusions related to pre-existing conditions, ensuring the individual understands the policy's scope, and offering appropriate alternatives if the chosen product is unsuitable. The regulatory justification lies in the FCA's principles for businesses, particularly Principle 6, Customers. Treat customers fairly, and Principle 7, Communications. Communicate information clearly, fairly, and not misleadingly. The CII Code of Ethics further reinforces the duty to act with integrity and in the best interests of the client. An incorrect approach would be to automatically decline coverage solely based on the pre-existing condition, without a detailed review of the policy's specific provisions regarding such conditions. This fails to uphold the principle of treating customers fairly and may breach the duty to provide clear and accurate information. Another incorrect approach would be to offer a policy that does not adequately cover the pre-existing condition without clearly explaining these limitations, which would be misleading and a breach of FCA Principle 7. Furthermore, failing to explore alternative products or policy options that might offer some level of coverage for the condition, even with specific exclusions, would not be acting in the client's best interests. The professional decision-making process in such situations should involve 1. Understanding the client's needs and circumstances, including their medical history. 2. Thoroughly reviewing the eligibility criteria and policy terms of the proposed healthcare insurance product, with a specific focus on clauses related to pre-existing conditions. 3. Clearly and transparently communicating all relevant information to the client, including any exclusions, limitations, or waiting periods associated with their pre-existing condition. 4. Exploring all available product options that might be suitable, considering the client's specific situation and regulatory requirements. 5. Documenting all advice and decisions made. Question 7. Strategic planning requires a healthcare insurance provider to consider how to manage the financial uncertainties associated with potential medical claims. A key decision facing the provider is how to best address the risk of significant, unexpected medical expenses that policyholders might incur. Which of the following approaches most effectively aligns with the fundamental purpose of healthcare insurance and regulatory expectations for such products? Option A. Establishing a substantial reserve fund to cover all anticipated claims, effectively retaining the full financial risk of medical events. Option B. Offering insurance policies that transfer the financial burden of unexpected medical expenses from the policyholder to the insurer, backed by appropriate capital reserves. Option C. Implementing stringent underwriting criteria to decline coverage for individuals with pre-existing conditions, thereby avoiding the majority of high-cost claims. Option D. Developing comprehensive wellness programs and preventative care initiatives to significantly reduce the likelihood and severity of medical claims. The correct answer is C. Implementing stringent underwriting criteria to decline coverage for individuals with pre-existing conditions, thereby avoiding the majority of high-cost claims. Explanation. This scenario presents a professional challenge because it requires a healthcare insurance provider to balance the financial implications of potential claims with the ethical imperative to provide adequate coverage and maintain customer trust. The decision-maker must navigate the complexities of risk management within the specific regulatory framework governing healthcare insurance products in the UK, as per the CII exam's jurisdiction. The correct approach involves risk transfer. This is the most appropriate strategy because healthcare insurance, by its very nature, is designed to transfer the financial risk of unexpected medical expenses from the individual to the insurer. The regulatory framework for insurance in the UK, overseen by bodies like the Financial Conduct Authority, FCA, mandates that insurers must operate prudently and ensure they have the financial capacity to meet their obligations to policyholders. Risk transfer, through the sale of insurance policies, is the fundamental mechanism by which this is achieved, allowing individuals to access necessary medical care without facing potentially ruinous costs. Ethically, it aligns with the principle of fairness and social responsibility by pooling risk across a large group to protect individuals from catastrophic events. An incorrect approach would be to focus solely on risk avoidance. While some minor administrative risks might be avoided, avoiding the core risk of medical claims would negate the purpose of a healthcare insurance product and would be a fundamental failure to meet regulatory expectations and customer needs. This would likely breach regulatory requirements concerning product suitability and fair treatment of customers. Another incorrect approach would be to rely entirely on risk retention. While insurers do retain a portion of risk, e.g., through deductibles or by setting premiums to cover expected claims, retaining the entirety of potential high-cost medical claims would render the insurance product financially unviable and expose policyholders to unacceptable financial burdens. This would be a clear violation of the FCA's principles of treating customers fairly and ensuring adequate product provision. A further incorrect approach would be to focus solely on risk reduction without adequate transfer, while implementing measures to reduce the incidence or severity of claims, e.g., wellness programs, preventative care incentives, is a valuable component of a comprehensive risk management strategy. It cannot entirely eliminate the need for financial protection against unforeseen and potentially very expensive medical events. Over-reliance on reduction alone without sufficient transfer mechanisms would leave policyholders inadequately protected and could lead to regulatory scrutiny for offering insufficient coverage. The professional decision-making process for similar situations should involve a thorough assessment of the risks inherent in the product, an understanding of the regulatory obligations, and a clear articulation of how each risk management technique contributes to the overall viability and fairness of the insurance offering. This involves considering the potential impact on policyholders, the insurer's financial stability, and adherence to ethical principles and regulatory mandates. Question 8. Quality control measures reveal that a Medicare insurance agent is consistently presenting Medicare Part C, Medicare Advantage, plans by focusing heavily on the $0 monthly premium and the inclusion of prescription drug coverage, while providing only brief, generalized information about potential copayments, coinsurance, and the annual out-of-pocket maximum. The agent also tends to frame these plans as a direct and universally beneficial upgrade from original Medicare. Which of the following approaches best aligns with Medicare marketing regulations and ethical standards for presenting Medicare Part C plans? Option A. Emphasizing the $0 monthly premium and the inclusion of prescription drug coverage as the primary benefits of Medicare Part C plans, with a brief mention that other costs may apply, and encouraging beneficiaries to view these plans as a superior alternative to original Medicare. Option B. Presenting Medicare Part C plans as a mandatory enrollment option for all beneficiaries seeking comprehensive coverage, highlighting only the most popular benefits and encouraging quick enrollment to avoid missing enrollment periods. Option C. Providing a comprehensive overview of all available Medicare Part C plans, detailing not only the monthly premium and prescription drug coverage, but also clearly explaining all potential out-of-pocket costs, including copayments, coinsurance, and the annual out-of-pocket maximum, while also clarifying the differences between Medicare Advantage and original Medicare and the implications of choosing a Medicare Advantage plan. Option D. Focusing on the convenience of integrated benefits in Medicare Part C plans and downplaying the importance of specific cost-sharing details, suggesting that the overall value proposition makes the exact copayment amounts less critical for beneficiaries. The correct answer is C. Providing a comprehensive overview of all available Medicare Part C plans, detailing not only the monthly premium and prescription drug coverage, but also clearly explaining all potential out-of-pocket costs, including copayments, coinsurance, and the annual out-of-pocket maximum, while also clarifying the differences between Medicare Advantage and Original Medicare and the implications of choosing a Medicare Advantage plan. Explanation. Scenario analysis. This scenario is professionally challenging because it requires an insurance agent to navigate the complex and evolving landscape of Medicare Part C, Medicare Advantage, plan offerings, and their associated marketing regulations. Agents must balance the need to inform potential beneficiaries about available options with the strict requirements designed to prevent misleading or deceptive practices. Failure to adhere to these regulations can result in significant penalties for both the agent and the insurance carrier, as well as harm to beneficiaries who may enroll in plans that do not meet their needs due to misrepresentation. The dynamic nature of plan benefits, network restrictions, and enrollment periods necessitates constant vigilance and accurate communication. Correct approach analysis. The correct approach involves providing beneficiaries with accurate, unbiased information about Medicare Part C plans, including clear explanations of benefits, costs, provider networks, and any limitations or exclusions. This approach prioritizes beneficiary understanding and informed decision-making, which is a core ethical and regulatory requirement. Specifically, it aligns with the Centers for Medicare and Medicaid Services, CMS, marketing guidelines that mandate transparency and prohibit deceptive or misleading statements. Agents are expected to present all available plan options fairly and to ensure beneficiaries understand the differences between Original Medicare and Medicare Advantage plans, as well as the specific details of each Medicare Advantage plan being discussed. This includes discussing formulary information, prior authorization requirements, and potential out-of-pocket maximums. Incorrect approaches analysis. An approach that focuses solely on highlighting the most attractive benefits of a Medicare Part C plan without disclosing potential drawbacks or limitations is ethically and regulatorily unsound. This constitutes a misleading omission and can lead beneficiaries to make enrollment decisions based on incomplete or inaccurate information, violating CMS marketing rules against deceptive practices. An approach that emphasizes the plan's low premium or $0 premium as the primary selling point, while downplaying or omitting information about potential out-of-pocket costs such as deductibles, copayments, coinsurance, and the annual out-of-pocket maximum, is also a regulatory failure. This misrepresents the true cost of coverage and can lead to financial hardship for beneficiaries. An approach that fails to clearly explain the differences between Medicare Part C and Original Medicare, or that suggests Medicare Part C is a superior or mandatory replacement for Original Medicare without full disclosure of the implications, e.g., loss of supplemental benefits, network restrictions, is a violation of the requirement for clear and accurate communication. Beneficiaries must understand their choices and the trade-offs involved. Professional reasoning. Professionals in this field must adopt a client-centered approach, prioritizing the beneficiary's understanding and best interests. This involves a thorough understanding of Medicare Part C regulations, including CMS marketing guidelines. When presenting plan options, professionals should 1. Begin with a clear explanation of Original Medicare and how Medicare Advantage plans work as an alternative. 2. Present all available Medicare Advantage plans fairly, without favoring one carrier or plan over another, unless specifically requested by the beneficiary based on their stated needs. 3. Detail all key aspects of each plan including benefits, costs, premiums, deductibles, copayments, coinsurance, out-of-pocket maximums, provider networks, prescription drug coverage if applicable, and any restrictions or limitations. 4. Provide beneficiaries with ample opportunity to ask questions and ensure their understanding. 5. Avoid making guarantees about future benefits or coverage. 6. Adhere strictly to CMS marketing rules, ensuring all materials are compliant and all verbal representations are accurate and not misleading. Question 9. Risk assessment procedures indicate that a significant number of claims submitted for complex surgical procedures are being processed with CPT codes that do not fully capture the extent of services documented in the medical records. Which of the following approaches best optimizes the process for accurate CPT code assignment and claims adjudication? Option A. Develop a standardized CPT code for all complex surgical procedures within a given specialty to streamline the claims processing workflow. Option B. Accept the CPT codes submitted by the healthcare provider without further verification, assuming the provider is knowledgeable about appropriate coding practices. Option C. Prioritize claims for complex surgical procedures based on their dollar value and expedite their processing using the CPT codes most commonly associated with that surgical specialty. Option D. Implement a mandatory, detailed review of all medical records by trained coding specialists to verify the accuracy of the provider-submitted CPT codes against the documented procedures and diagnoses before adjudication. The correct answer is D. Implement a mandatory detailed review of all medical records by trained coding specialists to verify the accuracy of the provider-submitted CPT codes against the documented procedures and diagnoses before adjudication. Explanation: this scenario is professionally challenging because accurately assigning current procedural terminology, CPT, codes is fundamental to correct claims processing, reimbursement, and compliance within the healthcare insurance industry. Misapplication of CPT codes can lead to underpayments, overpayments, audits, and potential legal ramifications, all of which impact the financial health of both the insurer and the healthcare providers. The complexity arises from the vast number of codes, the nuances in their definitions, and the need to interpret medical documentation accurately. The correct approach involves a thorough review of the medical record to ensure the selected CPT code accurately reflects the services rendered by the healthcare provider. This means understanding the specific procedure performed, the diagnosis supporting the medical necessity, and any modifiers that may be applicable. This approach is correct because it directly aligns with the principles of accurate claims adjudication and regulatory compliance. Specifically, it adheres to the guidelines set forth by the Centers for Medicare and Medicaid Services, CMS, and the American Medical Association, AMA, for CPT coding, which mandate that codes must precisely represent the services provided. This ensures fair reimbursement and prevents fraudulent or erroneous billing practices. An incorrect approach of selecting the most frequently used CPT code for a particular specialty without a detailed review of the medical documentation is professionally unacceptable. This fails to account for the unique circumstances of each patient encounter and the specific services performed. This approach risks misrepresenting the services, leading to incorrect reimbursement and potential violations of anti-fraud statutes. Another incorrect approach of relying solely on the provider's self-reported CPT code without independent verification by the claims examiner is also professionally flawed. While provider input is valuable, the insurer has a responsibility to ensure the accuracy of claims submitted for payment. This approach abdicates that responsibility and could lead to the insurer paying for services not rendered or not medically necessary, thereby exposing the insurer to financial risk and potential regulatory scrutiny. A further incorrect approach of applying a standard CPT code for all similar procedures, regardless of the complexity or documentation, demonstrates a lack of due diligence. Healthcare services are not monolithic, and CPT codes are designed to differentiate between varying levels of service, complexity, and anatomical sites. This generalized approach ignores these critical distinctions, leading to inaccurate coding and potential financial discrepancies. The professional decision-making process for similar situations should involve a systematic review of the claim, including the provider's documentation, the diagnosis, and the proposed CPT code. This process should be guided by established coding guidelines, payer policies, and a commitment to accurate and ethical claims processing. When in doubt, consulting coding experts or seeking clarification from the provider is a crucial step in ensuring the correct application of CPT codes. Question 10. Governance review demonstrates that a healthcare insurance provider's claims department is consistently meeting its internal targets for reducing claim processing times. However, the review also highlights an increase in policyholder complaints regarding the fairness and clarity of benefit determinations. Which approach best reflects a commitment to regulatory compliance and ethical benefit determination in this context? Option A. Implement a more rigorous, multi-stage review process for all benefit determinations, ensuring that each decision is supported by a comprehensive assessment of policy terms, medical evidence, and regulatory guidelines, even if it slightly increases processing times. Option B. Focus on streamlining the initial claim intake process to gather only the minimum necessary information, thereby speeding up the overall decision-making timeline. Option C. Increase the training for claims handlers on efficiency metrics, emphasizing the importance of meeting processing time targets to manage operational costs effectively. Option D. Introduce a policy that automatically denies claims for certain complex conditions, unless the policyholder provides extensive additional documentation beyond what is typically required. The correct answer is A. Implement a more rigorous, multi-stage review process for all benefit determinations, ensuring that each decision is supported by a comprehensive assessment of policy terms, medical evidence, and regulatory guidelines, even if it slightly increases processing times. Explanation: this scenario is professionally challenging because it requires balancing the insurer's need to manage risk and costs with the policyholder's right to receive the benefits they are entitled to under the policy. The core of the challenge lies in interpreting policy terms and applying them consistently and fairly, especially when faced with complex medical information or situations where the policy's wording might be ambiguous. Careful judgment is required to ensure that benefit determinations are not only compliant with regulatory requirements, but also ethically sound and uphold the trust placed in the insurer by its policyholders. The correct approach involves a thorough and objective review of all relevant documentation, including the policy wording, medical evidence, and any applicable legislation or regulatory guidance. This approach prioritizes a clear understanding of the policy contract and the claimant's circumstances, ensuring that the benefit determination is based on established criteria and is applied equitably. Specifically, it requires adherence to the principles of good faith and fair dealing, which are fundamental in insurance contracts. Regulatory frameworks, such as those governing healthcare insurance in the UK, mandate that insurers act honestly and reasonably in their dealings with policyholders, and that claims are processed efficiently and fairly. This includes providing clear explanations for decisions and offering appropriate avenues for appeal. An incorrect approach that relies solely on internal cost-saving targets, without a comprehensive review of the policy and evidence, fails to uphold the insurer's contractual obligations and regulatory duties. This could lead to unfair denial of benefits, potentially breaching the duty of utmost good faith and contravening consumer protection regulations that require fair treatment of customers. Another incorrect approach that involves making a determination based on a single piece of medical evidence without considering other relevant information or seeking further clarification is also professionally unacceptable. This demonstrates a lack of due diligence and can result in an inaccurate and unfair decision, potentially leading to regulatory sanctions for failing to conduct a proper investigation. A further incorrect approach that prioritizes expediency over accuracy by making a quick decision without fully understanding the policy terms or the claimant's situation risks misinterpreting the policy and denying legitimate claims. This not only harms the policyholder, but also exposes the insurer to reputational damage and regulatory scrutiny for poor claims handling practices. Professionals should adopt a decision-making framework that begins with a clear understanding of the policy contract and the claimant's specific situation. This involves gathering all necessary information, objectively assessing it against the policy terms and relevant regulations, and then making a fair and well-reasoned determination. Transparency, clear communication with the policyholder, and adherence to internal procedures and external regulatory requirements are paramount throughout the benefit determination process. Question 11. The risk matrix shows a client is seeking health insurance and is concerned about premium costs, indicating a potential interest in plans with lower monthly payments. The client has expressed a desire for comprehensive coverage for their family. Considering the Affordable Care Act, ACA regulations, which of the following represents the most appropriate approach to advising this client? Option A. Recommend a short-term health insurance plan, emphasizing its lower monthly premiums, and explain that it offers flexibility for individuals who do not want to commit to long-term coverage. Option B. Advise the client that they can choose to waive coverage for certain essential health benefits if they believe those services are unlikely to be needed by their family, to reduce the overall cost of the premium. Option C. Suggests that the client explore individual health insurance policies that are not sold on the health insurance marketplace, as these may offer more customizable benefit structures and potentially lower costs. Option D. Explain the 10 essential health benefits mandated by the ACA and discuss how qualified health plans, available through the health insurance marketplace, are designed to cover these benefits, while also exploring options for financial assistance like premium tax credits. The correct answer is D. Explain the 10 essential health benefits mandated by the ACA and discuss how qualified health plans, available through the health insurance marketplace, are designed to cover these benefits, while also exploring options for financial assistance like premium tax credits. Explanation. This scenario is professionally challenging because it requires an insurance professional to navigate the complexities of the Affordable Care Act, ACA, in the context of advising a client. The ACA, with its numerous provisions and ongoing interpretations, demands a thorough understanding to ensure compliance and provide accurate guidance. The professional must balance the client's needs with the legal and regulatory obligations imposed by the ACA, particularly concerning essential health benefits and coverage mandates. Careful judgment is required to avoid misrepresenting coverage or advising on non-compliant plans. The correct approach involves accurately identifying and explaining the ACA's requirements for qualified health plans, specifically highlighting the 10 essential health benefits that must be covered. This includes clarifying that plans sold on the health insurance marketplace, and many employer-sponsored plans, are subject to these mandates. By focusing on these core ACA principles, the professional ensures the client receives accurate information about compliant coverage options, thereby upholding their ethical duty to provide competent advice and their regulatory obligation to adhere to the ACA's framework. An incorrect approach would be to suggest that a plan with limited benefits, even if cheaper, would be a suitable alternative to a qualified health plan. This fails to acknowledge the ACA's mandate for essential health benefits and could lead the client to purchase non-compliant coverage, exposing them to potential penalties and a lack of necessary medical care. Another incorrect approach would be to downplay the importance of essential health benefits, implying that the client can choose to forego them. This misrepresents the law and fails to inform the client of their rights and the minimum standards for health insurance under the ACA. Finally, advising the client to seek coverage outside of the regulated marketplaces without clearly explaining the ACA implications and potential risks of non-compliant plans would also be an incorrect and potentially harmful approach. Professionals should employ a decision-making framework that prioritizes understanding the client's needs, thoroughly researching the applicable regulatory landscape, in this case, the ACA, and then clearly communicating compliant options and their implications. This involves a commitment to continuous learning regarding healthcare regulations and a dedication to providing transparent and accurate advice that protects the client's interests and ensures adherence to legal requirements. Question 12. What factors determine the underwriting and rating of healthcare insurance products, ensuring compliance with regulatory frameworks that prohibit unfair discrimination? Option A, an individual's postcode and their perceived social standing. Option B, an individual's occupation and their educational attainment. Option C, an individual's medical history, pre-existing conditions where legally permissible, smoking status, and age. Option D, an individual's family history of non-manifested conditions and their frequency of visiting a general practitioner for routine checkups. The correct answer is C, an individual's medical history, pre-existing conditions where legally permissible, smoking status, and age. Explanation. This scenario is professionally challenging because it requires an underwriter to balance the insurer's need to accurately assess risk and set appropriate premiums with the ethical and regulatory obligation to avoid unfair discrimination. The underwriter must consider factors that genuinely impact the likelihood and cost of healthcare claims without resorting to proxies that could lead to discriminatory pricing based on protected characteristics. Careful judgment is required to distinguish between legitimate underwriting factors and those that are prohibited. The correct approach involves considering factors that are directly and demonstrably related to an individual's expected healthcare costs and the insurer's risk. This includes an individual's medical history, pre-existing conditions, where permitted by law, lifestyle choices that have a proven impact on health outcomes, e.g., smoking status, and age. These factors are considered because they provide a statistically sound basis for predicting future healthcare utilization and associated expenses. Regulatory frameworks, such as those governing health insurance in the UK, emphasize fairness and prohibit discrimination based on protected characteristics. Therefore, using these direct risk-related factors aligns with the principle of underwriting for risk while adhering to legal and ethical standards. An incorrect approach would be to consider factors that are not directly related to an individual's health risk or that serve as proxies for protected characteristics. For example, using an individual's postcode as a primary determinant of premium, without a clear, evidence-based link to specific health risks prevalent in that area that are not already captured by other underwriting factors, would be problematic. This could inadvertently discriminate against individuals living in certain areas, potentially correlating with socioeconomic status or ethnicity, which are protected characteristics. Another incorrect approach would be to penalize individuals for seeking preventative care or for having a family history of a condition without considering the individual's current health status and lifestyle. This could discourage healthy behaviors and unfairly penalize individuals for genetic predispositions that may not manifest as illness. Such practices would likely violate regulations prohibiting unfair discrimination and could lead to reputational damage and regulatory sanctions. Professionals should employ a decision-making framework that prioritizes regulatory compliance and ethical considerations. This involves a thorough understanding of the specific underwriting guidelines and the relevant legal and regulatory prohibitions against discrimination. When evaluating potential underwriting factors, professionals should ask, does this factor directly and demonstrably impact the individual's expected healthcare costs or the insurer's risk? And could this factor be used as a proxy for a protected characteristic, leading to unfair discrimination? If the answer to the second question raises concerns, the factor should be avoided or re-evaluated for its necessity and fairness. Question 13. Examination of the data shows that a significant portion of the population relies on a publicly funded healthcare system for primary and emergency care. Considering this, which approach to recommending private healthcare insurance products would best align with regulatory expectations and ethical practice for a client seeking supplementary coverage? Option A suggests that the client purchase a basic hospital cash plan to provide a small daily benefit for any period of hospitalization, as this is a low-cost option that offers some financial support. Option B. Conduct a detailed needs analysis to identify specific gaps in public healthcare provision that private insurance can effectively address, such as faster access to elective procedures or coverage for services not fully reimbursed, and then recommend suitable products. Option C. Advise the client to opt for the most expensive private medical insurance plan available, assuming that premium products offer the highest level of protection and peace of mind. Option D. Recommend a comprehensive private medical insurance policy that covers all inpatient and outpatient treatments, regardless of public system provision, to ensure maximum coverage. The correct answer is D. Recommend a comprehensive private medical insurance policy that covers all inpatient and outpatient treatments, regardless of public system provision, to ensure maximum coverage. Explanation: this scenario presents a professional challenge because it requires an insurance professional to navigate the complexities of a healthcare system structure and funding mechanisms to effectively advise clients on product suitability. The challenge lies in understanding how different healthcare models, such as a predominantly public system versus a more privatized one, impact the role and necessity of private healthcare insurance. Misinterpreting these systemic differences can lead to recommending inappropriate products, potentially leaving clients underinsured or overpaying for coverage they do not truly need. Careful judgment is required to align product recommendations with the realities of the healthcare landscape and the client's specific circumstances. The correct approach involves accurately assessing the client's existing healthcare coverage within the context of the prevailing healthcare system. This means understanding the scope of services provided by the public system, the typical out-of-pocket expenses individuals might incur, and the specific gaps that private insurance can effectively fill. By identifying these gaps, the professional can then recommend products that offer genuine value and address the client's identified needs, such as faster access to specialist care, coverage for services not fully reimbursed by the public system, or enhanced comfort and choice. This approach is ethically sound and professionally responsible as it prioritizes client welfare and informed decision-making, aligning with the CII's emphasis on consumer protection and suitability. An incorrect approach would be to recommend comprehensive private medical insurance without first understanding the extent of public healthcare provision. This fails to acknowledge the existing safety net and may lead to unnecessary expenditure for the client. Ethically, this is problematic as it could be seen as exploiting a client's potential lack of understanding about their healthcare system. Another incorrect approach is to focus solely on the most expensive premium products, assuming that higher cost equates to better value, without a thorough needs analysis. This disregards the principle of proportionality and may not be suitable for the client's financial situation or actual healthcare requirements. Recommending products that duplicate coverage already provided by the public system also represents a failure to provide value and could be considered mis-selling. Professionals should adopt a client-centric decision-making process that begins with a comprehensive understanding of the client's current healthcare access and potential future needs. This involves active listening, thorough questioning about their experiences with the healthcare system, and a clear explanation of how different insurance products can complement, rather than simply replace, existing provisions. The professional must then demonstrate how the recommended product specifically addresses identified gaps or enhances the client's healthcare options in a cost-effective manner, ensuring transparency and suitability. Question 14. When evaluating a disability insurance application, an advisor discovers that the applicant has a history of a chronic condition that is not currently symptomatic but could potentially impact future insurability. The applicant is hesitant to provide detailed medical records from their specialist, citing privacy concerns. What is the most ethically and regulatorily sound approach for the advisor to take? Option A. Obtain the applicant's explicit written consent to request specific medical information directly from their specialist, clearly outlining what information is required and for what purpose, while assuring the applicant of data protection measures. Option B. Contact the applicant's general practitioner to request a summary of their medical history, assuming this is sufficient for underwriting purposes without specific consent for this disclosure. Option C. Advise the applicant that detailed medical records are mandatory and that failure to provide them will result in an automatic rejection of the application, without exploring alternative consent mechanisms. Option D. Proceed with the application by making a general assumption about the applicant's health based on the limited information provided, without further medical verification. The correct answer is A. Obtain the applicant's explicit, written consent to request specific medical information directly from their specialist, clearly outlining what information is required and for what purpose, while assuring the applicant of data protection measures. Explanation. This scenario presents a professional challenge because it requires balancing the insurer's need to accurately assess risk with the applicant's right to privacy and fair treatment. The advisor must navigate potential conflicts between obtaining necessary information for underwriting and avoiding the disclosure of sensitive, non-essential personal details. Careful judgment is required to ensure compliance with data protection regulations and ethical principles of confidentiality. The correct approach involves obtaining consent for the disclosure of medical information directly from the applicant, clearly explaining what information will be shared and why it is necessary for the disability insurance application. This aligns with the principles of informed consent and data protection, ensuring the applicant understands and agrees to the sharing of their personal health data. Regulatory frameworks, such as those governing data protection and insurance underwriting, mandate that insurers only collect and use information that is relevant to the risk being assessed, and that they obtain appropriate consent for any data sharing. Ethically, this approach upholds the applicant's autonomy and right to privacy. An incorrect approach would be to obtain medical information from the applicant's general practitioner without explicit, informed consent from the applicant for that specific disclosure. This would violate data protection laws that require consent for processing sensitive personal data, such as health records. It also breaches ethical duties of confidentiality owed to the applicant. Another incorrect approach would be to infer or assume the applicant's health status based on limited, non-medical information, and then proceed with underwriting without verifying the necessary medical details through appropriate channels. This is unprofessional, potentially discriminatory, and fails to adhere to the principles of accurate risk assessment required for disability insurance. Finally, proceeding with the application by downplaying the importance of disclosing pre-existing conditions to the applicant, thereby potentially leading to non-disclosure, is a severe ethical and regulatory failure. This misleads the applicant and can lead to policy rescission and claims disputes, undermining the integrity of the insurance process. Professionals should employ a decision-making framework that prioritizes transparency, informed consent, and adherence to regulatory requirements. This involves clearly communicating the information needs of the insurer to the applicant, explaining the purpose of data collection, and obtaining explicit consent before accessing any personal or medical records. If there is any doubt about the necessity or appropriateness of collecting certain information, the professional should err on the side of caution and seek clarification or alternative compliant methods. Question 15. The performance metrics show a slight increase in the number of prior authorization requests for outpatient mental health services compared to the previous quarter, while prior authorization requests for outpatient medical services have remained stable. Considering the Mental Health Parity and Addiction Equity Act, MHPA, which of the following actions best demonstrates a commitment to compliance and equitable treatment? Option A. Increase the copayment for outpatient mental health services to offset the perceived higher administrative burden of processing the increased prior authorization requests. Option B. Conduct a detailed comparative analysis of the prior authorization criteria, approval rates, and turnaround times for both mental health/substance use disorder services and medical/surgical services to identify any potential disparities. Option C. Implement a stricter network adequacy standard for mental health providers, requiring more credentials and experience to ensure higher quality care and potentially reduce the need for prior authorizations. Option D. Advise plan members to seek care from in-network providers for medical services only, as mental health services are subject to different administrative processes. The correct answer is B. Conduct a detailed comparative analysis of the prior authorization criteria, approval rates, and turnaround times for both mental health/substance use disorder services and medical/surgical services to identify any potential disparities. Explanation. This scenario is professionally challenging because it requires a nuanced understanding of the Mental Health Parity and Addiction Equity Act, MHPA, and its practical application in insurance product design and administration. The challenge lies in balancing the intent of the legislation to ensure equitable coverage for mental health and substance use disorders with the operational realities and financial considerations of an insurance provider. Professionals must exercise careful judgment to avoid inadvertently creating barriers to care or violating the spirit and letter of the law. The correct approach involves a thorough review of the plan's design and operational practices to identify any disparities in financial requirements or treatment limitations between mental health/substance use disorder benefits and medical/surgical benefits. This approach is right because it directly addresses the core mandate of MHPA, which is to prevent such disparities. Specifically, it requires comparing deductibles, copayments, coinsurance, out-of-pocket maximums, visit limitations, and prior authorization requirements for mental health and substance use disorder services against those for medical and surgical services. Regulatory justification stems from the Department of Labor, HHS, and Treasury's Joint Guidance and Regulations implementing MHPA, which emphasize the need for parity in both quantitative and non-quantitative treatment limitations. Ethically, this approach upholds the principle of fairness and equal access to care. An incorrect approach would be to assume that simply offering coverage for mental health and substance use disorders satisfies MHPA. This is a regulatory failure because it ignores the parity requirement. The law mandates that the *level* of coverage must be comparable. Another incorrect approach is to focus solely on financial requirements while neglecting non-quantitative treatment limitations, such as network adequacy or prior authorization processes. This is a regulatory failure because MHPA explicitly covers both types of limitations. Ethically, this approach fails to ensure comprehensive and equitable access to necessary care. A third incorrect approach is to justify differences based on the perceived higher cost or utilization of mental health services, without robust, objective data that demonstrates the differences are not discriminatory and are based on medical necessity, not parity avoidance. This is a regulatory failure, as it can lead to discriminatory practices and a violation of the law's intent to prevent such justifications for disparate treatment. The professional decision-making process for similar situations should involve a proactive and ongoing assessment of plan design and administration against MHPA requirements. This includes regular internal audits, seeking expert legal and compliance counsel, and staying abreast of evolving regulatory guidance. When discrepancies are identified, the priority should be to implement corrective actions that bring the plan into compliance, rather than seeking to justify existing disparities. Question 16. The efficiency study reveals that a significant number of long-term care insurance policies sold are subsequently lapsed by policyholders within the first 5 years due to affordability issues or a misunderstanding of coverage. As a financial advisor specializing in healthcare insurance products, what is the most appropriate course of action when discussing long-term care insurance options with a new client who expresses concern about future healthcare costs and the potential need for care services? Option A. Conduct a detailed assessment of the client's current health status, projected future care needs, financial capacity to sustain premium payments over the long term, and risk tolerance for potential premium increases before recommending any specific policy. Option B. Focus on presenting a range of policy options with varying premium levels, highlighting the most affordable choices first, and assuming the client will ask clarifying questions if needed. Option C. Recommend a comprehensive policy with the highest level of coverage available, explaining that while premiums may be higher, it offers the most robust protection against unforeseen future costs. Option D. Provide a general overview of long-term care insurance without delving into specific policy details, advising the client to research options independently and make their own decision. Correct answer is B. Focus on presenting a range of policy options with varying premium levels, highlighting the most affordable choices first, and assuming the client will ask clarifying questions if needed. Explanation. This scenario is professionally challenging because it requires balancing the client's immediate financial concerns with the long-term implications of their healthcare needs and the regulatory obligations of providing suitable advice. The advisor must navigate the complexities of long-term care insurance, which often involves significant financial commitments and can be difficult to understand, while adhering to the principles of treating customers fairly and providing appropriate recommendations. The advisor's duty is to ensure the client fully comprehends the product's benefits, limitations, and costs in relation to their personal circumstances and future needs. The correct approach involves a thorough fact-finding process to understand the client's current health, projected future care needs, financial capacity, and risk tolerance. This includes clearly explaining the different types of long-term care insurance available, their respective benefits, e.g., home care, assisted living, nursing home care, policy limitations, premium structures, and the potential for premium increases. The advisor must then match these product features to the client's identified needs and financial situation, ensuring the client can afford the premiums throughout the policy's term and that the coverage aligns with their expectations. This aligns with regulatory requirements to act in the client's best interest and provide advice that is suitable for their circumstances. An incorrect approach would be to recommend a policy solely based on the lowest premium, without adequately assessing the client's actual long-term care needs or their ability to sustain premium payments. This fails to meet the regulatory obligation to provide suitable advice and could lead to the client being underinsured or unable to maintain the policy, resulting in a loss of benefits and financial hardship. Another incorrect approach would be to overemphasize the potential benefits of a policy while downplaying or omitting crucial details about exclusions, waiting periods, or the possibility of future premium adjustments. This constitutes a failure to provide clear and transparent information, potentially misleading the client and violating principles of fair treatment. Recommending a policy that is overly complex or does not align with the client's stated preferences or understanding, without sufficient explanation and clarification, also represents a failure to provide suitable advice. Professional decision-making in such situations requires a structured approach. First, comprehensively gather all relevant client information. Second, thoroughly research and understand the available long-term care insurance products, including their features, benefits, limitations, and costs. Third, analyze how each product aligns with the client's specific needs, financial situation, and risk tolerance. Fourth, present clear, unbiased, and comprehensive information to the client, ensuring they understand all aspects of the recommended product. And finally, document the entire advice process, including the rationale for the recommendation and the client's informed consent. Question 17. Regulatory review indicates that a client is inquiring about the coverage provided by Medicare Part A for their upcoming medical needs. The client specifically asks if Medicare Part A will cover a scheduled diagnostic imaging procedure performed at an outpatient clinic and a subsequent consultation with their primary care physician to discuss the results. Which of the following represents the most accurate and compliant response regarding Medicare Part A coverage for these services? Option A. Medicare Part A covers long-term custodial care in a nursing home, which would include the diagnostic test and doctor's consultation. Option B. Medicare Part A covers physician services and diagnostic tests, but only if they are performed in a hospital setting. Option C. Medicare Part A is comprehensive and covers all hospital-related services, including outpatient diagnostic tests and doctor's appointments. Option D. Medicare Part A covers inpatient hospital stays, skilled nursing facility care, hospice care, and some home health care. It does not typically cover routine physician visits or diagnostic tests performed in an outpatient setting. The correct answer is D. Medicare Part A covers inpatient hospital stays, skilled nursing facility care, hospice care, and some home health care. It does not typically cover routine physician visits or diagnostic tests performed in an outpatient setting. Explanation: this scenario is professionally challenging because it requires an insurance agent to navigate the complexities of Medicare eligibility and coverage, specifically concerning the distinction between inpatient and outpatient services under Medicare Part A. Misinterpreting these distinctions can lead to incorrect advice, potentially causing beneficiaries to incur unexpected costs or miss out on entitled benefits. Careful judgment is required to ensure accurate guidance aligned with federal regulations. The correct approach involves accurately identifying that Medicare Part A primarily covers inpatient hospital stays, skilled nursing facility care, hospice care, and some home health care. It does not cover routine physician visits, outpatient procedures, or long-term custodial care. Therefore, advising a client that Medicare Part A will cover a routine doctor's appointment or a diagnostic test performed in an outpatient setting is incorrect. An incorrect approach would be to broadly state that Medicare Part A covers all hospital-related services without differentiating between inpatient and outpatient care. This fails to acknowledge the specific limitations of Part A and could mislead the client into believing that service is not covered by Part A or are indeed covered, leading to financial repercussions. Another incorrect approach is to suggest that Medicare Part A covers services typically associated with Medicare Part B, such as physician services, outpatient diagnostic tests, or durable medical equipment. This demonstrates a fundamental misunderstanding of the distinct coverage areas of the two Medicare parts. Finally, an incorrect approach would be to advise a client that Medicare Part A covers long-term custodial care, such as assistance with daily living activities in a nursing home, while Part A may cover a limited stay in a skilled nursing facility for rehabilitation following a qualifying hospital stay. It does not cover the ongoing custodial care that is the primary need for many individuals in long-term care settings. The professional decision-making framework for such situations involves 1. Understanding the specific Medicare part being discussed and its defined benefits. 2. Clarifying the client's specific healthcare need or service in question. 3. Consulting official Medicare resources or internal compliance guidelines to confirm coverage details for the specific service. 4. Providing clear, accurate, and unambiguous advice based on verified information, highlighting what is covered and what is not. 5. Directing the client to official Medicare resources for further detailed information. Question 18. Cost-benefit analysis shows that health savings accounts, HSA, offer significant tax advantages and potential for long-term savings, but require enrollment in a high-deductible health plan, HDHP. Considering a client who has a stable income, a generally good health status with predictable, moderate annual medical expenses, and a desire to maximize tax-advantaged savings for future healthcare needs, which of the following approaches best aligns with regulatory requirements and professional best practices for advising this client on HSAs? Option A. Advise the client to forego an HSA and HDHP in favor of a traditional health insurance plan with lower deductibles, as this client's predictable medical expenses might not fully leverage the tax benefits of an HSA. Option B. Suggest that the client open an HSA and contribute to it, but allow them to maintain their current low-deductible health plan, as the tax benefits of the HSA are still applicable regardless of the underlying health plan. Option C. Recommend an HSA coupled with an HDHP, thoroughly explaining the deductible out-of-pocket maximums and the tax benefits of contributions, qualified withdrawals, and potential investment growth, while also clarifying the penalties for non-qualified withdrawals. Option D. Emphasize the investment growth potential of HSAs and suggest contributing the maximum allowable amount without fully detailing the implications of the HDHP deductible or the rules for qualified medical expenses. The correct answer is C. Recommend an HSA coupled with an HDHP, thoroughly explaining the deductible, out-of-pocket maximums, and the tax benefits of contributions, qualified withdrawals, and potential investment growth, while also clarifying the penalties for non-qualified withdrawals. Explanation: this scenario is professionally challenging because it requires an advisor to balance the potential financial benefits of a health savings account, HSA, with the individual's specific healthcare needs and risk tolerance, all within the strict regulatory framework governing HSAs and consumer-driven health plans. The advisor must ensure the client fully understands the trade-offs, particularly the requirement for a high-deductible health plan, HDHP, to be eligible for an HSA, and the implications of using HSA funds for non-qualified medical expenses. The advisor's duty is to provide advice that is in the client's best interest, adhering to principles of suitability and transparency. The correct approach involves a comprehensive evaluation of the client's current and anticipated healthcare utilization, their financial stability, and their understanding of HSA mechanics. This includes explaining that HSAs are tax-advantaged savings accounts that can only be used in conjunction with an HDHP. The advisor must clearly articulate that while HSAs offer tax benefits for medical expenses and potential investment growth, they require the individual to bear more of the upfront healthcare costs. The advisor should also highlight the long-term benefits of HSAs, such as their portability and the ability to use funds for retirement if not used for healthcare, provided the client understands the rules and potential penalties for non-qualified withdrawals. This aligns with regulatory requirements to ensure clients receive accurate and complete information to make informed decisions about their health insurance and savings options. An incorrect approach would be to solely focus on the tax advantages and potential investment growth of an HSA, without adequately assessing the client's ability to manage the higher deductibles of an associated HDHP. This could lead to the client being unable to afford necessary medical care when it is needed, or facing significant financial strain. Another incorrect approach would be to downplay the restrictions on HSA usage or the penalties for non-qualified withdrawals, creating a misleading impression of the plan's flexibility. Failing to explain the mandatory link between an HSA and an HDHP is a significant regulatory failure. Eligibility is a fundamental requirement. Furthermore, providing advice that does not consider the client's individual circumstances and risk tolerance, but rather pushes a product based on general benefits, would violate the principle of suitability. Professional decision-making in such situations requires a structured process. First, thoroughly understand the client's financial situation, health status, and healthcare needs. Second, clearly explain the features, benefits, risks, and limitations of all relevant consumer-driven health plans, including HSAs and HDHP. Third, assess the client's comprehension of the information provided. Finally, recommend a plan that best aligns with the client's stated goals and risk tolerance, ensuring full compliance with all applicable regulations. Question 19. The assessment process reveals a medical report for a healthcare insurance claim that includes the abbreviation SOB. The claims assessor needs to understand this abbreviation to accurately evaluate the policyholder's condition and determine the appropriate benefit payout. Which of the following actions represents the most appropriate and professionally responsible approach for the claims assessor? Option A. Proceed with the claim assessment without clarifying the meaning of SOB, assuming it is a common and straightforward term. Option B. Consult a reputable medical dictionary or glossary to confirm the meaning of SOB in a clinical context. Option C. Infer the meaning of SOB based on the surrounding symptoms described in the report, such as chest pain and difficulty breathing. Option D. Search for the meaning of SOB on a general internet search engine and use the first result that appears plausible. The correct answer is B. Consult a reputable medical dictionary or glossary to confirm the meaning of SOB in a clinical context. Explanation: scenario analysis. This scenario is professionally challenging because it requires the insurance professional to accurately interpret medical information presented in an abbreviated format. Misinterpreting common medical abbreviations can lead to incorrect assessment of a claimant's condition, potentially resulting in the denial of a valid claim or the approval of an invalid one. This directly impacts the insurer's financial stability and the claimant's access to necessary health care, highlighting the critical need for precision and adherence to professional standards. Correct approach analysis. The correct approach involves cross-referencing the abbreviation with a reliable, industry-standard medical dictionary or glossary. This ensures that the interpretation is accurate and aligns with established medical terminology. This practice is ethically sound as it prioritizes accurate assessment and fair treatment of the claimant. From a regulatory perspective, while specific regulations might not list every abbreviation, the overarching principles of acting with due skill, care, and diligence, and treating customers fairly, necessitate accurate interpretation of information relevant to policy terms and conditions. Incorrect approach is analysis. One incorrect approach is to make an educated guess based on the context of the surrounding words. This is professionally unacceptable because it introduces a high risk of misinterpretation. Medical abbreviations can have multiple meanings, and context alone may not be sufficient for accurate understanding. This could lead to a breach of the duty of care owed to the claimant and potentially violate regulatory requirements for fair claims handling. Another incorrect approach is to rely on informal online search engines or personal knowledge without verifying against a recognized medical resource. While these sources might offer a quick answer, their accuracy and reliability are not guaranteed. This lack of due diligence can lead to errors in claim assessment, potentially resulting in financial loss for the insurer or unfair treatment of the policyholder, contravening the principles of good faith and fair dealing expected by regulators. A further incorrect approach is to ignore the abbreviation and proceed with the assessment without clarification. This demonstrates a lack of diligence and a failure to gather all necessary information for a proper decision. It can lead to an incomplete or inaccurate assessment, which is detrimental to both the claimant and the insurer, and fails to meet the professional standards of thoroughness required in insurance assessments. Professional reasoning. Professionals should adopt a systematic approach when encountering medical abbreviations. This involves 1. Identifying the abbreviation. 2. Consulting a recognized and authoritative medical dictionary or glossary. 3. If ambiguity persists or the abbreviation is highly specialized, seeking clarification from the medical professional who provided the information. 4. Documenting the source of interpretation for audit purposes. This structured process ensures accuracy, fairness, and compliance with professional and regulatory expectations. Question 20. System analysis indicates that a healthcare insurance provider is developing a new policy that includes coverage for a recently approved, innovative medical treatment. However, the existing policy wording, while comprehensive for established treatments, does not explicitly detail the coverage parameters, pre-authorization requirements, or potential limitations for this specific novel therapy. The regulator has recently emphasized the importance of absolute clarity in policy documents regarding the scope of benefits, particularly for emerging medical technologies. Which of the following represents the most appropriate course of action for the insurer? Option A. Immediately revise the policy wording to explicitly define coverage, limitations, exclusions, and any necessary pre-authorization procedures for the new medical treatment before launching the product. Option B. Launch the policy as planned and address any coverage questions for the new treatment on a case-by-case basis as they arise from policyholders. Option C. Postpone the policy launch indefinitely until the long-term efficacy and cost-effectiveness of the new treatment are definitively established by medical consensus. Option D. Proceed with the policy launch, relying on the general medically necessary treatment clause to cover the new therapy, assuming it will be interpreted broadly. The correct answer is D. Proceed with the policy launch, relying on the general medically necessary treatment clause to cover the new therapy, assuming it will be interpreted broadly. Explanation. This scenario presents a professional challenge due to the evolving nature of healthcare and the constant need for insurers to adapt their product offerings while remaining compliant with regulatory requirements. The core difficulty lies in balancing innovation and market responsiveness with the ethical obligation to provide clear, accurate, and non-misleading information to consumers, particularly concerning the scope and limitations of coverage. The regulators focus on ensuring policyholders understand what is and isn't covered, especially for novel treatments, necessitates a proactive and transparent approach from insurers. The correct approach involves a thorough review of the proposed policy wording by the insurer's compliance and legal teams, ensuring it explicitly addresses the coverage for the new treatment, including any limitations, exclusions, or pre-authorization requirements. This approach aligns with the regulatory expectation that policy documents are clear, comprehensive, and accurately reflect the benefits and conditions of the insurance. Specifically, it adheres to principles of consumer protection, which mandate that individuals are fully informed about their insurance contracts to make sound financial and healthcare decisions. Transparency regarding new and potentially complex treatments is paramount to avoid future disputes and uphold consumer trust. An incorrect approach would be to proceed with the policy launch without explicit clarification of coverage for the new treatment, relying on general policy clauses. This fails to meet the regulatory requirement for clarity and specificity, potentially leading to consumer confusion and dissatisfaction when claims are denied or require extensive justification. It also risks misrepresenting the product's benefits. Another incorrect approach would be to assume that existing clauses for medically necessary treatments are sufficient. While seemingly reasonable, this overlooks the regulator's emphasis on explicit disclosure for novel or emerging therapies, which may have different evidence bases or cost structures compared to established treatments. This approach lacks the proactive transparency demanded by the regulatory framework. Finally, delaying the policy launch indefinitely without a clear plan to address the new treatment would be detrimental to business objectives and market competitiveness. But the primary regulatory failure in the other incorrect approaches is the lack of transparency and clarity regarding coverage for the specific, novel treatment. Professionals should adopt a decision-making process that prioritizes regulatory compliance and consumer understanding. This involves proactively identifying potential ambiguities or gaps in policy wording, especially when new medical advancements emerge. A structured review process involving compliance, legal, and product development teams is essential. When faced with uncertainty, the default should be to err on the side of greater clarity and disclosure, even if it means a slight delay in product launch, to ensure adherence to consumer protection regulations and maintain ethical standards.